Good morning, everyone. Glad you're here today. As always, really appreciate you coming out and spending a few minutes with us here this morning on these morning market breakdowns. Well, excellent. Our Ali just said he had 40 minutes ago had a successful demo trade on the dollar yen. So good job. Nicely done. All right, so let's get rolling here this morning. And of course, we got to start out talking about risk, because this is a very important thing. A lot of traders never really consider risk, but know that you can lose money. The markets are volatile. So only trade with risk capital. And it really just comes down to some, as I like to say, good old common horse sense. Don't trade with money you can't afford to lose. All right, that's me. Been around for, well, I've been blessed enough to be around for a long time. We'll put it that way. Live down here in the Rogue River Valley in Southern Oregon with wife and family. And it's going to be a hot one today. It's supposed to hit 103 here today. So I guess the pool will be calling me this afternoon. All right, so we're going to take a look here as usual at the news events for the week. So we're going to mosey on over to these two websites. Now, I have no tie to these websites, just like the way they lay out the news, because I always like to check the news before initiating any trades for the day or the week. So let's go over there. And here is the Forex Factory. So if you just come to this address, forexfactory.com, you can use their calendar. I like to filter these folders here that you see on your screen. The red ones are going to be the high impact events, the orange ones medium, and the yellow low impact. And so basically I just eliminate everything except for the high impact. That's the way I do it, and that really cleans it up as well. So you can see here today, for example, this morning, these are, by the way, all East Coast times. You can set it to your time zone simply by clicking here. But earlier this morning, had news out of Great Britain. Tomorrow we have European Central Bank President Draghi speaking. That's at 4:15 a.m. Eastern time. And so that's an early one. And then later in the morning, we'll have at 8:30 a.m. a couple of reports out of the US, and then that evening out of Australia. So just be aware that if you're trading any of the Forex pairs that are correlated with those. Thursday, we have some news out of Switzerland, as you can see here too. And then on Friday, a couple of big reports out of the US, and also later on Friday morning, Bank of England Governor Carney speaks. So those are the big events. So you'll want to pay attention, because I personally don't necessarily like to look at, or I'm sorry, I don't necessarily like to take positions just ahead of the news. I'll usually let the news pass by for an hour or so. If I'm in a position ahead of the news, I'm not going to necessarily liquidate it, but as long as I've already taken some profits off the table, then I am bound to hold it to some degree, or at least manage it. So anyway, just something to think about there. Again, this is the Forex Factory's website. You can also come over here to myfxbook.com and use their economic calendar. And again, I like to filter this as well. And I just, once I'm on this page right here, it says more. See right there, you click that. And again, I just personally like to look at the high impact events. Their calendar is a little bit different the way they do this. You can also select the currencies you wish to view. Once you've done that, come down here to click save, and there you go. Now, this website also will send out audio alerts to you. So if you have your speakers on, as the news event approaches, it will kick you a audio alert. You'll hear a little sound, and that's always handy too, I guess, if you're not in the room. All right, so that's going to be that here this morning as far as the news events go here for the week. You can see what we got going here. Pretty much the same thing. Sometimes this website will show some additional items that they consider high impact. But for the most part, there you go. All right, so let's go back to the other page here. All right, so let's do this. So All right, we just looked at that, the news that may cause some volatility this week. And now let's go ahead and get to some charts. I think that's what we're all here for, right? See what the heck is going on here. So as I load these up here, there we go. The stock market has been in fuego for several days now. I'm going to bring up a daily chart. This is, by the way, my workspace, and I have different time frames. I'll talk about that here in just a moment, but I want to look at the daily chart here of the Nasdaq. This is the June, and it equates to the US Tech 100 on Nadex. But you see, this is again a daily chart. So here was the low, and actually I don't have that marked properly. Right there. We had that wick, and we're right in the ballpark in this congestion here. So you see where the market hit there on the 3rd of June, and that was the 4th. So 1, 2, 3, 4, 5. This is the 6th day currently. Of course, this can change later in the session, but 6th session in a row where we're seeing higher price actions. Right now, it's into a mid-level resistance area. As you can see here, I have this red or light red zone marked here. Let me clear these up here. And the other thing, and I think this is really important, based on my momentum indicator here, we just pushed to new highs on momentum. You see this high right here? Let me grab my pen here, make sure you can see this right here. The market, or excuse me, the momentum is higher than that. So this is actually projecting that we're going to come up and possibly test this level. Now, of course, there's no guarantee, but that's what it's projecting. And that's why I say it's not a guarantee. It's just a projection. That is a substantial move still. And, you know, we're right here on the cusp of this resistance as well, right? You know, at the top of that light red box is that area. So when a market moves into a resistance area, we have to respect that it could react. In other words, bounce off of that level or that area. So we need to take that in consideration. And that's why I look at all of the different time frames, because, well, for lack of a better phrase, you don't want to just buy or sell willy-nilly. I don't think you'll hear that associated with trading very often, willy-nilly. All right, so here is a 729-minute chart. So going down from here, all other time frames that we review are going to be divisible by 3. So 729 divided by 3 will be a 243 chart. So it's going to be the next one we look at. Each time frame allows me to see a little bit more detail, things we can try to interpret here. So what I'm going to do here as we go down, because I think this is an important market, we're just going to mark off some different levels of support or resistance here that I see on these time frames that I haven't marked at the moment here. So let's do that. And so I'm just looking at, you know, for pivots essentially. And we've kind of got most of these marked off here. So, you know, a question that I receive from time to time is, why do you do this? Well, because I want to know where the market is likely to run into roadblocks that will prevent price from pushing, at least on the first move, into or beyond that area. In this case, you can see here we have this horizontal line I just put here on top of all these different real bodies, which are the thicker part of the candles and the wicks. It's not perfect, but it's right there in the zone. And I look at support and resistance as zones. And that's, again, why I have these rectangles on here, because they are zones. All right, so look how strong the momentum is here. It just blew away all previous highs in the momentum indicator, and it is strong. It is weakening a little bit, and I say that because the way I have this indicator programmed is that once it starts to weaken, the indicator becomes a lighter color or lighter shade of blue. You see it's a little bit white there. If you look at the red one, for example, as well, here, pretty red, but here you can see it's probably easier that it is a lighter red. And momentum started to fade right there, and look what happened with price. Price rallied right there. So knowing that, and we're in a resistance zone, momentum still appears very strong. Now, just because it's changing color doesn't mean it can't continue in that direction. It may just want to pull back. The market may want to pull back a bit. So that's what I have to keep in mind as well. The cycle study that I have down here is extended, but it can stay in these ranges for a bit as well. you'll see something like over here. It stayed up in this range for a while whenever the market is trending strongly. Same on the downside. So far we see a lot of energy in this market to the upside. All right, so let's come down here. And we're going to jump down here to the 81 minute. All right, so part of my trading is not only analyzing support and resistance, or the energy in the markets, but also chart patterns. So look for trading opportunities. And so what I see here on this time frame is the potential for a head and shoulder pattern into this resistance zone. And if we get that, then I would be looking for a possible shorter term move to the downside. We still need a right shoulder. This is an hour and a half or 81 minute chart. So each candle that forms takes 81 minutes. So it may not form today, but it's definitely something to keep an eye on longer term. Any questions this morning? If you have any questions, feel free to fire them at me. Just type them in your little box there. Happy to help out. All right, so look at the difference in momentum on this time frame versus the others that we just reviewed. So if I look at price here from high to higher high, and look at the loss of momentum here. So that's somewhat telling, in that on this time frame, we're likely to see some sort of, we could even see a little push higher and then some consolidation, which may form that right shoulder. Yeah, good morning. All right, so let's move down to the 27 minute chart. So by the way, this morning, going to look at not only this market, which is the Nasdaq, but also crude oil and the US dollar Swiss franc. All right, so again, we have the stock market open here at the bottom of the hour, and you can see how the market just keeps grinding here. So this is a half-hour chart essentially. You can pull up a 30-minute chart on Nadex. This is a 27-minute chart on my workspace. The market moves into this level, and again, we just kind of reviewed these areas, didn't we? Potential head and shoulders of a head and shoulder top pattern. We could even possibly see a triple top or a double top if we're going to see a topping pattern. So the idea here is, as we work our way down, is to look for potential opportunities, obviously, but also these patterns. So if things aren't quite set up yet, these patterns where we may get a reversal in a zone of support or resistance, in this case, resistance. I also look for continuation opportunities. In other words, since there's so much energy to the upside, if we can get an opportunity to get long this market, that would, be something I would absolutely look for. It's not all about reversal patterns. All right, so let's come down here to the 9-minute, see if we see anything different here. So I will draw a line across these highs here, and you can see price just kind of bounced off of that here a moment ago. And let's see here. And the other idea here of looking at different times is that you see different things with more clarity. You don't see some of this on, say, the 729-minute chart, for example. All right, so we have looking at the 9-minute chart, if I look at this blue moving average, which is the 50-period simple moving average right here, it is clearly angled up. So I use these moving averages as support and resistance levels, but I also use the blue one to help, basically verify trend direction. And the trend is clearly up here. We've actually had several cycles, and the further we get into cycles, and I'll show you what I'm talking about here, the further we get into these cycles, the odds lessen that it will continue. It doesn't mean it can't continue, but they lessen, if that makes sense. So if we look here, for example, the market was in this channel or range here. It since has broken out, and we're in an uptrend, and there's one cycle. This is a possible second cycle here, yet we don't have a low on the cycle indicator, which would mean it has to do something like this. See how I did that right here? And I lined that up right there with my somewhat straight line. Okay, so the further we get into these, I call these are waves or cycles. So 1, 2, 3, 4. So there's a potential here. The further we get into like cycle number 5, 7, 9, etc., the more likely, the higher probability of a possible retracement or turn. Okay, so let's go down to the 3 minutes. So the 3 minutes, the one I'll do a lot of trading from intraday, but you don't have to. You can use the higher time frame as well. If you want to just trade from a 4-hour chart, that works really well, or a half-hour chart. So here's the thing with momentum here. So you see from this high right here to this high, momentum did not decrease. It actually increases. So it's convergent right there. And now we're losing some momentum here on this retrace, but everything is moving in convergently, so it's in step. So we could possibly see a continuation here. Let's do this. Let's mark off that level there. Let's see here. Let me grab the right tool right here. All right, so you see the trend. Obviously, it's to the upside. Price pulled back here. You see that we put in a low here. We have a lot of momentum to the upside. I'll show you another view of that. So if I look at the first indicator, the one in the middle panel on the chart starting at the 729, looking down. Whoops, let's see if I can get that right. There we go. Blue and up. So I look at the angle as well as the color. So this is kind of flat here, but it is, let's see, it looks slightly blue. Same here. So everything blue, meaning the blue wave is in force to the upside. So we could see a retrace. And I think that's what I'll watch for, a little bit further, a little bit deeper retrace. If that comes about, then a possible long opportunity. One last thing I like to do, I like to use the Fibonacci retracements. I'm going to start right at this low here on this chart. So basically we're, somewhere in this zone or region here is where I prefer to see the market drop into for a possible buying opportunity. The other thing too is I don't like to buy at these cycle highs. I like to buy at cycle lows. It's the equivalent of buying low and selling high. All right, so that's the idea here with the Nasdaq, looking for some sort of retrace here, somewhere around that level. What is that? The 75-ish level for a possible buying opportunity. All right, so next, let's go and take a peek here at crude oil. Crude oil currently up 0.92% on the morning. We'll start here at the higher time frame. Yeah, so as far as indicators to use, you can use whatever indicators you like. I actually have I'm not here to sell anything, but a course that I talk about all my indicators and such in pretty great detail, show you how to set that up. But you can use whatever indicators you like. These moving averages, you can put your own moving averages on, your own momentum indicator off of Nadex if you find one there. They have a lot of different indicators on there, but you can definitely do that. All right, so this is crude oil, and on this higher time frame, actually have it looks like a head and shoulder pattern. It's kind of working its way up here. Actually, we'll do it like that. All right, so actually this is kind of come and gone here. That was the shoulder right there that I would have looked at. So I look at these asymmetrical patterns. So we have a breakout and then the market pulled back here on this 4-hour chart. And you can see here it is right at the edge of this minor resistance zone, which is the lighter red color. Up cycle momentum is pulled back a bit, right in step with price, so everything's kind of in sync with each other at the moment. Above this minor resistance zone, there is an area that we could possibly see get filled in. This is the 89 period moving average. We'll sync that over as well. So if the market does indeed get above this, if you look left, you know, in this immediate view, there isn't a lot of resistance here. Let's see. So we have to come back way back here to see this pivot. So see how I did that? I just looked left, and it's very important that you do that in your trading. Most of us focus on the hard right edge of the chart rather than looking left, and you'll see so much more if you gaze to the left on your charts. All right, so that was the 243-minute chart on Nadex. You could pull up a 4-hour chart. Here is an 81-minute chart, so we definitely have a loss of momentum here. It's trying to regain itself. It's right below the changeover from where color shifts at 0. So there's basically no momentum in the market at the moment here in this time frame. You can see here the moving averages are moving sideways as well, kind of squared off there. Let's go down to the next lower time frame, which would be the 27-minute chart, and pretty similar, right? I mean, you can see these little highs in here and lows, but really no momentum at the moment. So I'm going to mark off a couple of other support levels, and we're just going to go right there, I think. So this is important. So we have right there, some touches in here. I believe it was last week I had somebody ask, you know, how do you draw these out? And that's how you do it. Just looking or eyeballing these. They don't have to touch perfectly on it. It's a zone, an area you're just kind of looking for. Okay, so hopefully you can see that, you know, the market, even if you don't have access to, for instance, this bar chart trader charting program, and price is really not doing a whole lot here. See this? Just compare the swings or the pivots of price, and you can really see here that it's been in this channel, or it is in this channel. Do you see that? Because if you look at this is pretty much telling you the same thing. So when the market's in the middle of a channel, which it appears to be at the moment in the middle of this range, what's it likely to do? Throw a question out your way. What's it likely to do? It could remain there. Well, let me rephrase it. What are the odds it goes either direction? What are the odds it goes either direction? You know, what are the odds it goes up, or what are the odds it goes down? Yeah, you're right. Most of you are getting that. So if it's in the middle of something, it has a 50-50 shot going either way, right? And we have no momentum that's giving us a heads up at this point. So this is a market at this point I want to see break out of this range. Yeah, good job. I want to see break out of this range and then look for an opportunity. So in other words, and we can kind of use the higher time frame energy or momentum to get a clue here. But let's say the market ends up breaking out to the downside. Then I want to see it come back and retest the low. And that if that has much lower momentum, then I'm going to look for an opportunity to perhaps sell some binaries in this region, that sort of thing. Now, just the opposite, if it breaks out to the upside, I want to look for a retest. In other words, just a pullback to the edge of the channel and then look to buy. So this will take a little bit of time to unfold here. So just real quick, if you come back to these other time frames, and not much momentum, see that? So we really have to wait for this to kind of break at this point. Does that make sense though? That'll save you a lot of heartache and a lot of headaches. rather than enforcing my opinion on it, I think this market is going to go higher, I can help use these tools or similar tools to gauge what the market's doing. And even if you just had a blank chart with just the candlesticks on it, I think you can see that the market has fairly equal highs and fairly equal lows. It's formed a range. So the market, rather than get involved in a trade, a directional trade, I should say, where you think the market's going to go up or down, let it tell you that it wants to go that way. That way, it saves a lot of frustration too. So I'm going to sync this and watch what it does up here. So you can clearly see the market stuck in that range. So at this point, the plan I just kind of outlined, which was based on the fact the market's got to get out of this range, is look for a breakout retest here for crude oil. All right, let's look at the dollar Swiss. So that's Forex pair right here, US dollar, Swiss franc. And let that load up. And let's start here at the 243 chart. So we actually, this chart has a pretty big double bottom that it made. See this? Or a 1-2-3. Some of you may know it as a 1-2-3 double bottom. It's even a head and shoulders in here, but that's essentially the pattern. And look at how strong the momentum is on this move up. It is broken out above recent swing highs on the momentum indicator. It came up, it tagged this mid-level resistance area. It's done it several times all through here. So not a surprise that it bounced off of that. Now we'll see how deep this pullback is, this little white candle that we currently see. And if this support level, this orange line I have on here, is going to hold. So let's go down and take a peek under the hood. We'll look at the 81-minute chart. Still strong energy here to the upside. So this is more of a market that is trending higher, right? Because if you look here closely, look at that trend channel to the upside. And that is a pretty decent move here over the last, 7 to 8 hours. Took out this resistance here, market above that. So we could see a pullback into that range, and perhaps we can get a trading opportunity at that level. So I hope you take notes from these, because through the days, you can go back and look at the archive shows. If memory serves me right, the markets we analyze here on this program every Tuesday morning, there's at least one that tends to, move in those directions that we project out. So if you take notes, you can come back and check it yourself and kind of lock it in. Of course, there's never any guarantee. Just want to make sure of that. But just from an analysis process, you can see the markets often fill in these areas that we talk about. The Magna Charta. I like that, Jeff. Okay, so here again are those regions. You see the purple region, which is a mid-level support. I'm sorry, mid-level resistance. I'll spit it out, right? And this is a support region, pretty wide. You can see the market has hovered around the upper edge of this quite a while. Again, this is a 27-minute chart, but we have some divergence here. So we have from high to higher high, and look at this, from high to lower high. Just check the angles of my lines, high to lower high. So anticipating the market to seek out the nearest level of support based on that, what I call double divergence there. So that would be, basically right in this region here. It actually ran into this level of support, but the next lower would be the middle line there, the middle horizontal line right on top of that orange line. Okay, so if the market comes down here, what does that mean? Well, we still have all this energy from these upper time frames to the upside, so we may see a bounce. So let's see here. I want to see something perhaps like this, and a bounce, and look to get on board perhaps to the upside with looking for the intent of the market to push all the way back up to this region. Now again, here's the thing. This is what I call a cycle study. It's in the middle of the indicator. The indicator has a 100 ceiling and a 0 bottom. This is a stochastic, by the way. It's in the middle, so it's not giving us a lot of information. I don't like to buy or sell in the middle of the range. I want to buy if it's down here or sell if it's on the top side. But I'm primarily looking for an entry to the upside, so I don't want to, buy right now. I want to see the market pull back here, and I want to see it move in this lower range. So you look at that, it's a 27-minute chart. That may take a few hours to unfold, right? If you just count each candlestick here is 27 minutes or a half hour, that's going to take some time to move down. So let's go down to the 9-minute. And here is a head and shoulder pattern going the opposite direction that we've been chatting about. So head and shoulder patterns are reversal patterns, trend reversal patterns. So the trend has been up. That's the left shoulder, that's the head. If you're not familiar with the pattern, I just think of somebody standing in front of you. All right, so we're just waiting for a right shoulder. That could give us a heads up when the market may come down and want to test this region here. And could that be traded? Yeah, I think you need to be a little bit more in tune, or you need to be in tune, with the energy of the fact that longer term, it's this way. Very short term, it's going to be this way. All right, so notice where this cycle study is here. Much lower than on the prior chart, isn't it? That's the kind of hook I'm looking for right there. And let's go finally to the 3-minute. So let's do this from this low right here, and I'm going to use this low right here in the center of your chart, rather than this one here, because the market, what I'm going to do is I'm going to measure the Fibonacci retracement. The market's already retraced from this move here, from the low to that high, beyond 50%. So I'm going to start with this low right here to measure this current move up, the entire move. We'll go from this low to this high. And what I like to do, and I've shown you folks this before, is I just come in here and I measure this range here, the 382, the 50, the 618% retracement levels. Because a lot of traders will watch those levels, and I just kind of draw a box. And the reason I do that is now I have this box and I can get rid of the numbers on the screen. So that is a region I would like to see the market pull into. But look at this. If I move this box to the left, staying relatively similar, it's already kind of come in there, hasn't it? So this is the 382 level right up here, and the 50% retracement was somewhere in this region, and this is the 618. So big retracement areas, and you can, if you look left, you can kind of see where these fall into some support or resistance areas. So I want to see this market pull back ideally into that box and look for a possible opportunity. Yeah, I didn't really get into the hook there, Bertrand, very deeply, but yeah, you're on the right track there. All right, so see how momentum came down, bottomed out, and now is trying to shift back to the upside. So on a 3-minute chart, again, something like this. Buy low, sell high. Buy support, sell resistance. That's kind of the idea. All right, so we got a couple markets. We got to watch for crude oil to break out of its range. I want to watch to see if this market will pull back a little deeper for a potential buying opportunity. And then the market we began this morning with was the Nasdaq. Let's take a look there, and it is up over 1% now as it just opened here on the session. So let's see. So look at that. We hardly got any retrace at all. It has not retraced here. And you can still see this buying. So we may see a continuation here, what we've been seeing in this market, where we have kind of these shallow retracements as the market continues to trend higher. Look at all that energy to the upside here. Just keep in mind that the further the market moves, now we just opened here, what, 4 minutes ago. So the further the market moves to the upside here, the more likely, as far as the cycles go, the more likely is we'll see a retracement. So at this point, since the market's already broken above this high, let's just redraw this to here. So on this time frame, again, we'll just do the same thing, kind of right here. So if we can see the market get into that or lower, if you recall, I drew out that ellipse, so we're looking for a retrace into that. It kind of overlaps. So we have a little bit of divergence here at the moment as well. And I'll point that out, and then we'll wrap this up for the day here. Now, this is not divergent here at the moment. This needs to hook over to the downside, my indicator, and it's not doing so at the moment. So it's diverging, but it's not divergent. So it's in the process, in other words. So what's so important about that? Well, when we get that divergence, the market will oftentimes, a high percentage of the time, move back the other direction. And that's what could lead to that retrace. And we may not get that. The market may just break out to a new high here. But you can see the swings, the rhythm of the market here. You know, it's just been this. Maybe we get something like that here at the end, this last bit that I've highlighted. So I'd keep an eye on those markets here for today. And if you need any help, feel free to reach out to us. This is our website. We actually have a staff, folks that have worked in the markets. I think everybody's over 20 years now. We've been at this for a long time, but that's how you can get a hold of us for the more information about binaries. Right there, gbinary.com. Email our staff, support@gbmembers, and that's our phone number. We're again on the West Coast. We're in Southern Oregon, so those are our hours. So you just have to adjust it according to your time zone. But there you go. That's the information. And let's see here. Yeah, so I believe I'll be around for next week's get together, and then after that I'll be on the taking a little summer vacation. So, but we can talk about that more. But I think most of you are regulars in here. I appreciate you coming by and spread the word. I'd love to be able to help more folks too. Hopefully you take away something here. And you know, if you ever have questions, if you think of something, you know, between now and next week, write it down and let me know. Feel free to ask then. By the way, I see somebody asked a question. What's the formula for calculating the ROI? Maybe we can get into that next week. I actually just use a spreadsheet, but there are a couple steps. In fact, you know what? The easiest thing for you to do to figure that out is just Google it. Just type that exact sentence. I don't mean to blow you off, but if you type that in, you'll get the calculation. You'll even find some calculators that are free out there. That's actually going to be your best bet. All right, so it looks like Ruth left. All right, so we'll try to hit that up next week. All right, anyway, there you go, folks. Have a great day. I'm Jim Prince. God bless. We'll see you all again next time. Take care, everyone.